The S&P down more than 10% for the week, and according to Bespoke, a correction this fast has only happened 4 other times since World War II. Joining us now is Mark Grant, Chief Global Market Strategist at B. Riley FBR. I would like to be having the 10-year note go by more frequently, Mark. Do you think we need a bounce in the yield there before we get any stabilization in the Dow or S&P or NASDAQ?
Joe, I don't see any bounce in yield coming anytime soon. In fact, the 2-year is so low that even if the Fed cut twice at 25 basis points, that's already been impacted in the market. One of the things that I think is the most interesting in this environment is, I deal for the most part with very large money managers and institutions, but I do help some individuals, and I've been able to take profits in this kind of market, and I'll tell you where. Yes, last hour you had some people on talking about that high yield spreads have widened versus treasuries, investment grade bonds have widened versus treasuries, but also the absolute value at the 10-year to 119. I've been able to take some profits in some of the bonds I own because my strategy is half investment grade bonds and half closed-end funds paying monthly, paying over 10%. So I'm taking profits in the bonds right now and freeing up cash without having any forced sales and getting ready at some point for taking some opportunities, but I don't think we're there yet.
You've talked about some of the serious breaks and corrections and sell-offs we've had in the past, and there seems to be a moment in time that in hindsight we can identify. We couldn't at the time, but something that happens that stems the decline or at least changes the sentiment. And I don't know how that happens when you're in the early stages of what could be a global pandemic. Are we stuck with a month or 2 months or 6 months of uncertainty where we're really not going to have any resolution on these issues? And can the market get to terminal price? I don't like to use the term terminal, but can you get to the to terminal pricing quickly? I was kind of making that point that the market's gone down so much that it is discounting I think a lot of the worst case scenario already, some of it anyway.
Okay, Joe, here's my view. You've got to separate, obviously, the most important thing, which is people and their lives and their health. But you got to take that category and put it over here for a minute. Then you got to take what's happening with the coronavirus and look at what it's doing to business and to GDPs all across the world. It is having a material effect. Airlines, travel companies, cruise lines, shipping companies. You can go through a whole litany of companies and sectors that are being adversely affected by the coronavirus, and I don't think that's going to let up any day soon.
Well, Mark, but
yeah, sure, you can.
But you got to figure out the duration of that too, because the snapback could be as sharp as the sell-off if it's not something that lasts a matter of years or quarters or whatever. I mean, if we knew this was going to quiet down in the summer, for example, then you could handle, 1 month or a quarter of much lower tempered business activity, couldn't you? If you knew that it was going to snap back, you'd look beyond it. It'd be like a special item on an earnings report or something.
Well, Joe, you're right. If we knew that, but none of us know that.
Right.
What we do know right now is that it's having this virus is having a terrific effect on supply chains, commodities. And now the question is, for instance, in China, they're running their money, their cash, through ultraviolet machines because they're afraid that the virus is being, carried on other things besides people. So it could also turn out, in a worst-case scenario, that we find out that boxes, shipping paper, wrapping paper, all kinds of other things, money, are also able to infect people. I'm not making a judgment saying I know this or that. What I'm saying is, at this point in time, and it's so uncertain, that the sell-off in equities, to me, is absolutely normal and should be what's going on. But if you do have some kind of balanced portfolio, or in talking with a lot of the big insurance companies I talk to, you're getting a terrific opportunity to sell bonds at profits and redeploy the money. And I don't think anybody's talking about that. All they're focusing on is the carnage in the equity market, which is true. But the silver lining is the bond markets, where you can actually take profits and raise capital and make some money.